Continues to hold on to most of its gains. The Nifty Bank is just moving from strength to strength, 170 points higher. What has happened is that this big spike in the rupee and the fall in the dollar, that's put additional pressure on IT stocks over the last couple of minutes of trade. So the likes of Infosys, for instance, down 2.5%. So banks taking the market higher. And the IT pack, obviously, is one of the key drags of the day. Look at the move on the rupee. Absolutely stunning. Sampath Reddy of Bajaj Allianz Life Insurance is with us on this leg of the show now. Sampath, thanks for joining in. Let me actually ask you this. What are you doing with IT stocks? Plenty of currency volatility. Plus, of course, you're reading of the base business itself in the US.
Right. We've been relatively positive on the IT services sector, largely because of the attractive valuations and the good quality businesses available at attractive valuation. IT services companies generate tremendous amount of cash flows. Their return on equity is very good, and also the valuations have been attractive. See, the currency of late may be volatile, but if you look back and see currency what it was from 6 months back to now, it's still a huge boost to the Indian IT services companies. I think that we are not expecting the currency to go back to what about what it was about 6 months level. Maybe some small appreciation could be there, but I think the large part of the depreciation is going to be showing up in terms of its quarterly numbers and annual numbers going forward. So we continue to like IT services sector, and even though there's a current volatility in the currency side, even though there is an expectation that the Fed may increase the rate and all that things are there, in spite of that, we still like the IT services sector.
What about the markets on the whole, Sampath? Good afternoon. This year has been a forgetful year for a lot of investors. The MSCI emerging market index itself, the India index was down about 14%. Emerging markets were down about 15-16%. What's the sense you're getting about how the Sensex could shape up, say, in 2019? Are you expecting to see a better year?
Yes, I think so. 2019 will be a lot better year, especially if you look at the Indian macro is now turning certainly positive, and crude, which was a big dampener for us, is now retreating. That's a big positive for us, and overall, with the credit squeeze which we have seen, that also led by the ILFS default, that also largely seems to be behind. Now, most of the good quality NBFCs have been able to raise money at attractive yield levels. So I think large part of the problems are now behind. Next year, certainly, we are hopeful that market will do very well. And probably, what could be, what was driving the whole of last year was, mostly the domestic consumption story. And next year onwards, post elections, we could see some sort of a pickup in the overall capital spending. That could lead to the some of the capital equipment companies also to perform well. If that happens, that will be a really broad-based rally. I think that would will be a very strong. That one will be a very strong revival if it were to take place.
Mm-hmm. By the way, just on a side note, again, this stock Tata Steel BSL, what used to be the erstwhile Bhushan Steel, again locked up in circuit, 10% on that stock, 50% up move in December. Of course, lots of speculation about what's going to happen, whether the Tatas are eventually going to merge this entity in Tata Steel, etc. So there's a lot of talk that's flying around, and the stock continues to just track higher and higher gains as well. 40 rupees stock, erstwhile Bhushan Steel. Sampath, just to get back to the larger sort of market construct, as we're getting into the next couple of months ahead of elections, probably heightened volatility, what's your prime portfolio construct? What are you most constructive on? What are you strictly avoiding?
Yeah, so we've been liking the NBFC financial services space, especially the private sector financials, most of the retail banks. But now we've been also turning positive on the corporate banks as well. That's on the banking side, and consumption is something we've been liking. But now is the time probably for the next year. We would look to gradually increase the exposure towards infrastructure and capital equipment market. I think at least that space we're keenly watching. We're very, very certain that the recovery is likely to take place very soon. Maybe I think post-election one could look to one could see the signs of recovery for sure. So that's how our view on the capital equipment side. IT, as I told you, we've been liking it for quite some time, and pharma also, we believe that the bottom has been made. The rupee was, appreciative only in the last few days, but if you look at it from 6 months back to now, there's a substantial depreciation, that is good for all the export-oriented companies. Crude is something which is, the good thing is it's coming down, and, probably the OMCs and the crude derivatives also will see, the positive impact. I think the overall for the next year, we are looking at a lot more broad-based rally than what we've seen in the last 1 year or so. Last 1 year is purely driven by the consumption, largely driven by the consumption stories. And next year we will see broad-based manufacturing also will pick up.
Okay, we hope all of that plays out. Sampath, thanks so much for joining us and giving us your views. So that's the word coming in on the market. By the way, we will close in flat terrain, but what we've done is recovered about 100 points from the lows. So it's quite volatile, actually, the trading action. The up move today has been led by the bank. So no two ways about that. The bank Nifty now up 160 points. But more market opinion coming in as we count down to the last 10 minutes of trade. Earlier today, we spoke with Kenneth Andrade, the founder and CEO of Old Bridge Capital Management. Began by asking him his thoughts on private capex. He says that we can expect the infrastructure sector to pick up first, followed by capital goods. Listen in.
A lot of this is coming from government spending. So my sense is it's going to be first infrastructure, and then it's going to be capital goods and manufacturing, and I think that's where all the buoyancy is really there. To call it a revival of the capex cycle, I still think you need to give it about a year and a half, because there are a lot of industries who still got surplus capacities on the ground.
There is a mild outperformance that India is showing in December, and more so in the past week. We've seen Wall Street take a huge beating, as well Asian indices not doing terribly well. We have outperformed. Is the tide turning? To what would you attribute this?
What's happening in India at this point in time going into the elections, while we have the macro problem that is there, your balance sheets are completely cleaned up. So my sense is earnings is not a concern anymore. If you just look at the asset side of companies' balance sheet, which is companies which are manufacturing, infrastructure, IT, pharma, etc., and non-banking companies, profitability growth is almost 22 to 25% across the board, and that's consolidated. So that's not really a question mark even going into 2019 and 20. If that's going to be the case in point, I think the derating that Indian capital markets have had in 2018 is done. So irrespective of where the global markets go, I mean, you will have a sentiment which will impact the market out here, but our sense is that you would rather be you will continue to do reasonably well compared to most of your global peers.
One space that you have increased your weightage in is power generation, and in that what you've done is JSW Energy and Power Mech projects are two of your large exposures. I just want to understand what the trigger is, what kind of growth do you see in this space, and for say long-term investors, how should they approach it?
More critically, there's no incremental capacity available in either of these businesses. One is a contracting business and contracting and engineering business, and the second is the generation business coming up on stream. So I think this is a part of the cycle that we like. No supply side, demand visibility, and valuations in your favor. So a very large part of our portfolio actually ticks most of those boxes out there.
Well, Kenneth, you're the second person in 24 hours telling us that there is no power capacity coming. Yesterday we had Credit Suisse telling us that they are actually putting a buy on BHEL on the assumption that we have to go for thermal power and BHEL will have to get orders. How will you play this entire theme? At the moment, we're of course seeing power companies not finding coal and not having PPAs and therefore going for distressed value. But which part of this entire power sector will you bet on? If you look at the average capacity utilization of most of the thermal power plants on the ground, they're close to 70% or just about over 70%. And you've got fair amount of capacity that's still available out here. So our premise has always been, first you have to exhaust capacity. We're not very excited on the capital goods space as far as power the value chain of the power assets are concerned, simply because listed companies still have reasonable amount of capacity and they're trading below their replacement cost.
So for a new enterprise to come up and set up a new power plant today is actually marking down your asset on day one. So I think that's not a premise that we work.
The other space I wanted to discuss with you, Kenneth, was the farm input side of the business, because 25% of your portfolio is in companies addressing the farm economy. And there you have names like Kaveri Seeds, Chambal Fertilizers, Coromandel International, Chambal Fertilizer, etc. stocks that have given great returns over the last 2 years. What is your expectation now that the government will give a bigger push pre-elections, and what kind of outlook do you have?
I mean, there's only two places that the government is going to spend on. One is on rural India, and second is on the capex side of the cycle. I think we're present in both those spaces. So I mean, whatever you've seen, all the news that you've seen on the ground, I don't think you can pull rural India out of the distress it is in unless you give them equity. Okay, unless you create an opportunity for equity to get created or incomes to get created out there. And that's what you're seeing with the cycle out there.
Well, we're just counting down to close. It's been a good day for the bulls, no two ways about that. So we've put on some more weight after the kind of moves we've seen in the last few days, and 10,900 is here. Sudarshan, for someone who has perhaps gone long and made money by the end of trade, would you advise him to square off his positions or let it run into tomorrow's trade as well?
No, I mean, if you want to square up, that's a different issue. My advice is to run your positions till tomorrow at least. We can easily get a gap up, and that would be a benefit to short-term traders.
Okay. All right. So, Mitesh, I mean, just looking at the day today, because the uptrend is still intact, I mean, would you be taking long positions home as well on the index?
Very much. I think there's no reason for you to worry about it. You've had a negative gap down opening, which was nicely bought into. And we are closing at the day's high, so there's a good chance that this 10,940, 950 should happen tomorrow, and in case we show momentum beyond that, we should head towards 11,050.
Okay, so head towards 11,050. Just 3.5 more minutes to go. In terms of stocks, it's the banks that have led from the front today. Look at the contribution chart. ICICI Bank, Kotak Mahindra Bank, even SBI actually is up quite a bit, and about 130 points contributed just from, on the Nifty Bank that is, 130 points contributed from these three, ICICI, Kotak and SBI. Among these three stocks, Sudarshan, the heavyweights in the banking space, which one looks like it could give you, perhaps better returns over the next few days?
Well, it's ICICI Bank, and it's very difficult to choose between the banks, but I would go for ICICI Bank.
Okay. Gentlemen, as we're getting into close, just want to get your thoughts on the weakness that we're seeing in tech stocks. I mean, I guess some of it is sentiment rub-off because the dollar has been on the back foot. But Sudarshan, for instance, an Infosys for you right now, is there a trade that you immediately see tomorrow perhaps?
See, I don't think that, these changes in the dollar really influence IT stocks except intraday perhaps. So, at current levels, Infosys is an excellent buying opportunity. A bullish pattern in Infosys was confirmed. It's not been cancelled. And why should it be? I would expect significant gains in IT, large cap IT stocks, and Infosys should lead it.
All right, why don't we just wrap up the day's trading action then, because for now looks like we'll end with some good gains for the day. The Nifty up about 23 odd points, but it's up 100 points from the day's low. So if you had gone long at the start of trade, you would have definitely go home with some big profits, in your hands. Apart from that, the Sensex as well, now well above the 36,300 mark. In terms of the big gainers today, you had a lot of participation come in from the heavyweight banking names. SBI, Kotak Mahindra Bank, all top the charts this afternoon. ICICI Bank as well up over 1%. And then you had some pharmaceutical names like Sun Pharma playing for a bit of a comeback, up almost about 3% over there. NBFCs like Bajaj Finance also gained quite a bit of ground, up almost 2.5% there. And some consumption stocks like Asian Paints, etc. ended the day in the green, up almost about 2%. On the downside, the biggest talking point was Z Entertainment, down about 9%. Some technology stocks like Infosys, Tech Mahindra, Wipro all came off. In fact, TCS as well, all down about 0.5% to 3%. UPL too was under pressure. A lot of brokerage concerns over there. And names like ITC just coming off a tad bit. But overall, it turned out to be a pretty good day of trade, especially for some of the large cap names. What about the mid cap?
The mid cap's not bad either, Sonia, because we've had a fair 70 odd point run on the mid cap index. Go down to individual stocks and you're seeing more action, of course. For instance, GNFC was strong throughout the day today, 8% up on that stock. United Breweries, definitely the end of the year season seems to be setting in. So you had United Breweries move higher, some of its smaller peers like GM Breweries also up and about in today's trading action. We had buying even on a Delta Corp, 5.5% up even on Delta Corp. PFC and REC, those twins have done well. We've seen a 5% move on PFC. REC has been on the higher side as well. The twins that are set for the merger, Capital First and IDFC Bank, about a 4.5% up move on both of those stocks as well today. Some interesting plays that were really out there. Some buying on a BHEL, buying on Ujjivan, a couple of the PSU names like Union Bank, also on the upside of the screen, 3.5% up on some of these stocks. Watch out for some of the infra names. Ashoka, Buildcon and J Kumar Infra were the noticeable names today. J Kumar specifically so. Big move on the stock, almost 9-10% up towards the close. Wow, make that 17%. I checked it on the screen about 10-15 minutes ago. It was 10% higher. Look at that, 17% on J Kumar Infra. So these are the key winners on the upside. We don't have too many losers to speak of. Perhaps a Volta stands out amongst the big stocks. There's some selling on Equitas that we've seen. Bharat Forge is also under pressure. So these are some of the names on the downside. Okay, gentlemen, so let's just wrap it up with final thoughts then. Sudarshan, I mean, you've been maintaining, this point that just go with the trend, and the trend still seems to be on the upside. Just in terms of, the sectoral bias tomorrow, anything specific that you would keep in mind?
Yes, it is pharma and private sector banks. Both, that's how we look at tomorrow morning. Both should outperform.
Okay. And Mitesh, these days we absolutely don't follow the Dow at all. Even if there's an overnight volatility, you'd still go with a positive bias?
Yeah, very much. I think, one is the crude sensitives are clearly doing well, and the overall perception of crude coming down is also helping India. So I think in that sense, the markets are getting double benefit. Plus, I think the Bank Nifty, as you were also highlighting today, is closed with a lot of strength and towards the day's high. And with the heavyweights bank starting to participate again or getting momentum, I think next few days should possibly be more upward bias, and today's low automatically becomes stop loss for any long positions.